Front and center this hour, the road ahead for investors following a hotter than expected inflation report. We are just 1 week away from the Fed's next rate decision. So does today's CPI print change anything? Plus, more pain in the tech trade as Apple shares slide again today. Our investment committee standing by to debate all of it. Joining us for the hour is Steve Weiss, Joe Terranova, and Carrie Firestone. So let's give you a quick check on the market at noon Eastern. Marginally higher across the board for the major indices, though losing a little bit of steam here as we just come on the air. Shares of Apple down about 1/3%. Energy is the laggard when it comes to the sectors, down about 0.8%, and utilities leading the way here, higher by about 1%. As mentioned, the VIX is just trading below 14, so things feeling a little calm here, even though we are in the September month of potential seasonality. Joe, what do you make today of the CPI number? Hotter than expected, but trending in the right direction, would you say?
50-50 for November in terms of a rate hike. So I don't think we did anything to gain a degree of clarity what that move is going to be in November from the Federal Reserve. I think it just added to an overall environment for the month of September. I was asked last evening at dinner, how would you describe the month of September in the equity markets? And I responded with sharply unchanged. And that's how it really feels. Markets seem to be going to a lot of different places. There's a lot of confusion. There's a lot of complexity. But I think the one thing that should be comforting for investors is two things have not happened. Number one, we have not defeated the prevailing bull trend of 2023. There's still that strength. And volatility remains at low levels. And I think that's encouraging. But for the moment right now, there's not much visibility in terms of what the CPI report is going to motivate the Federal Reserve to do in November. There's not clarity in terms of which particular asset class is going to lead as we move into the month of October. It seems to be about two places where investors could go. You could go to energy, or you could turn back to the mega caps, excluding Apple, to find a near-term opportunity. Other than that, sharply unchanged.
Very interesting. Yeah, I mean, energy prices, obviously, we're talking about the sector here in the intro, and then crude oil up about $89 a barrel. And obviously, energy prices really impacting the CPI. Carrie, gasoline was up 10.6% in August. That's over half of the increase. I know we strip out food and energy, but for everyday Americans, those prices really matter.
Yeah, obviously, it hurts where oil prices are today. But what the Fed cares about really is PCE, which will be coming. And I think the sign that we can really look at the core, which was less than expected, 2.4 versus 3.1 last month, as a sign of what the Fed will be thinking about when they consider when to raise rates, because they like to look at sort of the stripped down numbers, and those are trending in the right direction. Rent continues to come down.
That's right.
And rent has been a big factor in inflation since it began that acceleration last year, more than a year ago. So, I feel that, it's, as Joe says, we've got some good and some bad in these numbers, but the market feels the same way. It's up a little bit. It's not dramatically going in one direction or another. And I feel that that's part of this, treading water. We're waiting to see what happens with earnings. We're in this hiatus period between last earnings cycle and this earnings cycle, and Fed's not going to raise this time. So, let's get to earnings and see what companies are starting to say, with labor markets perhaps easing up and some possibly higher revenue numbers.
Okay.